A 2015 rate hike. Federal Reserve Chair Janet Yellen expects a rate liftoff this year, according to a closely watched speech she delivered on Thursday in Massachusetts. For analysis, let's bring in Scott Wren, Senior Global Equity Strategist at Wells Fargo Investment Institute. And Scott, it's great to have you here on set.
Great to be here, Scott.
So what did you think of Yellen's speech? It was pretty detailed, essentially warning the markets that a 2015 liftoff is coming.
That's what I think the market wanted to see, and that's what we wanted to see. Really, if you look back to the statement release on Thursday, not very much clarity. I didn't think that was a properly worded statement.
Sure.
We saw what the market did on Thursday. Then we saw what happened on Friday. And I think what happened, there was a lot of phones ringing at the Federal Reserve. They got together. They decided, hey, we need to get a little clearer here. That's why you saw the 4 Fed governors speaking over the weekend, talking about higher rates. I think that was the start of paving the way for a December rate hike. I wanted to see Janet Yellen follow on with that last night, and that's what happened.
Now, but she says inflation is weak because of the strong dollar, low oil prices, among other factors. But do you think that's enough time for inflation to creep up just until the December meeting, which is less than 3 months away?
I really don't. I think that when you look at personal consumption expenditures, that's up 1.2% year over year. 2% might seem like it's close, but that is miles and miles away. It's going to take a long time. So I think they're going to start to make at least this initial increase when inflation is well below their target.
And for the markets, I mean, what do you make of the volatility we've been seeing? Is it largely related to Fed uncertainty, and do you think it will subside once we get that initial rate hike?
I think it's a combination of, is global growth slowing down, which I think the market's reaction is overdone to the potential for Chinese growth. But I also think it's the Fed as well, the uncertainty there. So what we're seeing and what I think we will see is the Fed being more clear well in advance. And then I think we're going to see some better news internationally. Stability in China, better news out of the Eurozone, better news out of Japan. And so really in 2016, I think we're going to see some more record highs.
So you don't think the weakness in China is as bad as the headlines perhaps suggest?
Well, you know, most of the time when we look at China, we look at a lot of manufacturing data. And of course, their economy is shifting towards more of a service type of an economy. So they want the economy to slow down. The worry really is it slowing down faster than what the Chinese government wants to see? Our international team has a 6.8% GDP number out there for this year. That's a touch below the government. They feel comfortable with that. And so really what we're expecting is some stabilization there and not as much of a concern that Chinese growth is going to collapse or something like that.
Now, in terms of opportunities across the markets, I mean, where are you putting money to work? What would you tell clients?
Well, I think right now, and we do want our clients stepping in, you have to remember retail clients have been cautious in this entire rally. They're sitting in general on too much cash. They're underinvested in stocks. So what we want our clients doing, and this is easier said than done, is stepping in on these pullbacks. We want them buying into sectors that are sensitive to a continuation of the recovery. Consumer discretionary, technology, industrials, which, you know, that's kind of the contrarian play. Although when you look back with the industrial sector, it's been outperforming since July. I think 12 months from now, people will be happy focusing on industrials. Right now, it might not seem like the greatest play, but I think we're going to see some better news. And if you buy into that story, better international news, better news here, industrials are a good place to be.
All right, Scott Wren, we'll leave it there. It's great to see you. Thanks so much for coming in.
Thanks, Scott.
I'm Scott Gamm, and you're watching The Street.